Happy New Year, everybody, and welcome back to Finance Friday. This is another special edition of Money Girl where I answer your burning money questions. I love hearing from you, so please send in anything that's on your mind. You can leave me a voicemail at 302-364-0308. Today's terrific question is an email that comes from Sandy in Hopkinsville, Kentucky, who says, "Thanks so much for all you do. I love your podcast. I've been reading about the new Trump accounts, which are like IRAs for children with a $5,000 contribution limit. It sounds like a great opportunity for the younger generation. Can you explain how these accounts work in layman's terms?" Thank you for your great question, Sandy. If you're a new parent or will be one in the next few years, don't miss the opportunity to open a Trump account and give your child a financial head start in life. I'll review in this podcast how these accounts work and tips for maximizing them. So let's start out with what exactly is a Trump account. Well, there's a new regulation that creates a long-term tax-advantaged savings account for children, and we're going to call them the Trump account, for lack of a better term. It's used to give the next generation a financial head start, like building wealth that they can use for any purpose, like buying a home, attending college, or eventually retiring. As Sandy mentioned, these accounts are like an individual retirement account or IRA for those under 18 with a Social Security number. Now, it has to be set up and managed by a parent or a guardian. However, the funds cannot be withdrawn until the account beneficiary is 18. Unless an exception applies. Now, once the account owner turns 18, it does convert into a traditional IRA in their name, and, the beneficiary controls it as an adult. But unlike a regular IRA, a child who's under 18 does not need to have earned income to qualify for contributions to a Trump account. So let's talk about the benefits of these accounts. I think the massive benefit of opening a Trump account is that the United States Treasury will make a one-time $1,000 contribution to accounts for children born between January 1, 2025 and December 31st, 2028. The $1,000 benefit is available for children born during those 4 years as long as a Trump account is opened for those kids before their 18th birthday. Like a traditional IRA, a Trump account is tax-deferred, allowing funds to grow without being taxed each year. Now, that's a huge benefit compared to investments in a regular brokerage where you do have to pay taxes on capital gains, dividends, and interest annually. However, once a Trump account converts to a traditional IRA, again, that's when the beneficiary turns 18, withdrawals would get taxed as ordinary income. In addition, tapping the account before reaching age 59 and a half means paying an additional 10% early withdrawal penalty unless an exception applies. And that could be something like using up to $10,000 for a first-time home or paying for higher education. Now, the Trump account annual contribution limit for 2025 and 2026 is $5,000 per child. Now, that does not include the government's $1,000 addition. Contributions for a child's account can come from family, it can come from friends, charitable organizations, or even employers like a parent's employer, or if the child is old enough to work, the child's employer. However, employers can only contribute up to $2,500 of the $5,000 total, but that amount can be excluded from the child's taxable income. The investments you can choose for a Trump account are limited. You have to choose either index funds or exchange-traded funds that track a broad U.S. financial market like the S&P 500. That's going to promote ownership in diversified investments that also charge low fees. After age 18, any new contributions the account owner makes has to be based on their own earned income and comply with annual IRA limits. Now let's talk about what a Trump account could be worth in the future. What's the big deal? Why is this going to give kids a head start? Well, parents can always save for a child's future using a taxable brokerage account or a tax advantage 529 plan for education expenses. But getting $1,000 in seed money from the government might encourage parents of kids born again from 2025 through 2028 to start investing for them sooner rather than later. Let me give you some examples. Let's say a child born in 2025 gets a Trump account with $1,000 and does not receive any additional contributions. If the funds simply grow decade after decade, earning an average 7% return, the account could be worth $3,500 by age 18. Or over $16,000 by age 40, or over $65,000 by age 60, or over $132,000 by the time that child reaches age 70. But let's say that same child's Trump account is maximized annually with, again, an average 7% return. The account would be worth at least $184,000 by their 18th birthday. So that assumes that you're getting that starting balance of $1,000 from the government and $5,000 in annual contributions. So this is a conservative number since the allowable contribution limit is likely to increase after 2026. Funding a tax-advantaged Trump account for a newborn means they're likely to enjoy significant growth due to the power of compounding. And even if a family can't max out a Trump account annually, even modest contributions can reach an impressive balance over decades. Now, let's compare this to a Roth IRA and, which might be better for young investors. Once a child has their own qualifying income, again, no matter their age, it could be from a part-time job or even if they're self-employed, they qualify for either a traditional or a Roth IRA. So instead of funding a Trump account, which gets treated like a pre-tax traditional IRA, we might want to consider the benefits of using a Roth IRA instead. With a Roth IRA, you make after-tax, non-deductible contributions and then can make tax-free withdrawals in retirement. Therefore, even if your Roth IRA mushrooms with massive investment growth, you get to skip all the taxes in retirement. So that's a huge deal. Additionally, there are no required minimum distributions with a Roth IRA as there are with a traditional IRA. So your Roth IRA funds get to stay in the account and easily get passed along to your heirs if you own it long enough. Another significant Roth IRA benefit is that it's less punitive for taking early withdrawals before the age of 59 and a half. Since you pay tax up front on Roth contributions, you can take them as penalty-free distributions anytime. However, withdrawals of earnings from the account would be subject to taxes plus a 10% penalty if you're younger than 59 and a half. Unlike a traditional IRA, you can only contribute to a Roth IRA when you earn less than an annual threshold. And that's typically not a problem for young investors, who may only be earning part-time income. For 2025, the contribution limit for a Roth IRA is the same as a traditional IRA. It's up to $7,000 or $8,000 if you're over 50. For 2026, the limit will increase to $7,500 or $8,600 if you're over 50. However, you can't contribute more than your annual income to an IRA. For example, let's say a 16-year-old has a part-time summer job and earns $4,000 for 2025. In that case, they could only contribute $4,000 to a Roth IRA. But their relatives or employer could also contribute a total of $5,000 to their Trump account for the year. Again, the Trump account contribution limit is $5,000 for 2025 and 2026. So let's talk about some of the benefits of using a Roth IRA. The big one is avoiding future tax. Having tax-free income in retirement is something for a young person to look forward to, especially if tax rates rise over the decades. It allows you to pay lower taxes. If you believe you'll earn more in retirement than you do now, and that's typically the case for teenagers and young adults, you can pay less tax up front on Roth IRA contributions than on future traditional IRA withdrawals. For instance, if you're young or just starting your career, your income and tax rate may be much lower now than when you retire. You get to pass money easily to heirs. Since you never have to spend Roth IRA funds, you can leave them in the account indefinitely and pass them along to your heirs. You can make penalty-free withdrawals. As I mentioned, you can withdraw your original contributions anytime without paying taxes or a penalty. And once you've owned a Roth IRA for 5 years and reached age 59 and a half, you can also withdraw your account earnings penalty-free. You avoid conflicts with any workplace retirement plans. You can max out a retirement plan at work and a Roth IRA every year. Getting tax-free retirement income. Having less taxable income gives you more money to spend in retirement. Plus, it may reduce the likelihood that you'll be required to pay taxes on Social Security retirement benefits or be subject to other income-driven surcharges. And investing on an after-tax basis. Theoretically, you should be able to invest more post-tax to a Roth IRA than pre-tax to a traditional account. For example, a $5,000 Roth IRA contribution would be the equivalent to a traditional pre-tax contribution of $6,667, assuming a 25% tax rate. So I just want you to think about the benefits of a Roth IRA when a child does qualify for them. Again, they have to have their own income to qualify for a Roth IRA, but they don't with a Trump account. So if you have a young child, again, born in 2025 through 2028, that is certainly a great option. If you want to open one for a child born in those 4 years, all you have to do is submit IRS Form 4547 Trump account elections. And I'll put a link to this in the notes for the show. You can submit this form at any time. You can also visit trumpaccounts.gov to learn more. Starting in May 2026, the U.S. Treasury will send information on how to activate the account and receive the $1,000 benefit. The earliest you can begin making Trump account contributions will be July 4, 2026. Initially, all of these accounts will be created and held with the Treasury's designated financial agent. But at a later date, parents or guardians can transfer them into their preferred brokerage firm through a direct trustee-to-trustee rollover. Sandy, I want to thank you again for sending in this timely question. Remember, you can also email me with a question or comment by visiting my contact page at lauradadams.com. And while you're there, be sure to sign up for The Money Stack. That's my Substack newsletter. You can subscribe for free or support the show by becoming a paid member and getting access to my live educational and Q&A events. I hope to see you there. That's all for now. I'll talk to you soon. Until then, here's to living a richer life. Money Girl is a quick and dirty tips podcast. We've got a great team working on the show. I want to thank Steve Rickyberg, our audio engineer. Holly Hutchins is our director of podcast. Morgan Christensen is our advertising operations specialist. Rebecca Sebastian is our marketing and publicity manager. And Nathaniel Hoops is our marketing contractor.